Hi, I'm Joseph Kim. In this week's Video Insights, I will provide an update on Steadfast. Steadfast is one of the companies the Montgomery Fund is invested in, and I'll be providing some commentary on their 2019 earnings results. Steadfast reported underlying earnings before interest, tax, and amortisation, or EBITDA, of $193 million, which is a 17% increase on 2018 and within their guidance of $192 to $202 million. Growth in the company's earnings was driven by both organic and acquisitions, with the two accounting for 11% and 7% growth in earnings respectively. The improved earnings allowed the company to pay a final dividend of 5.3 cents per share, which was a 13% increase on 2018. Looking through the results, the highlights included $136 million of gross acquisition spend in 2019, which should contribute to additional earnings growth in 2020. To fund further acquisitions, the company raised an additional $100 million at $3.38 per share, in which the Montgomery Fund participated in. Secondly, Steadfast recorded 16% growth in gross written premiums, or GWP, written by the Steadfast network, of which 6% was organic. Growth in GWP was driven by both price and volume increases. And finally, on investments, the Steadfast client trading platform appears to be gaining momentum, with GWP written of $440 million through the platform, representing a 91% increase on last year. The platform is the culmination of investment in IT, which will help Steadfast brokers provide better outcomes for their clients in terms of pricing and service in the future. Some of the commentary highlights from the results include CEO Rob Kelly expecting the insurance rate hardening cycle to last a further 18 months. This should provide a pricing tailwind to gross written premiums over the next 1.5 to 2 years. Secondly, there is potential for an accelerated take-up of the Steadfast client trading platform, as a couple of major insurers from the network have come onto the platform late in fiscal 2019. And finally, the acquisition of the 50% of iCumulate Steadfast did not control has resulted in the company having to report additional liabilities on their balance sheet. It is important to note, however, the debt from this business is non-recourse to the parent entity, so the risk profile attributable to the Steadfast Group is lowered in this instance. In terms of the outlook, Steadfast anticipates further growth with underlying EBITDA of $215 to $225 million, with diluted EPS growth of 5 to 10%. The outlook bodes well for Steadfast shareholders in the medium term, with the market rewarding the result with a positive share price response despite the additional share count. That's it for this week's video blog, and remember to follow us on Facebook and Twitter.